All right, guys and gals, boy, that day went by fast. Welcome back, welcome back. Good morning, good afternoon, good evening. My name is Joseph. I am the head trader and lead moderator of our live trade room here at School of Trade. Thanks for joining us. Today is the 3rd of February, very short month, second month of the year of 2014. Welcome to your nightly newsletter. Now, guys, if the price action today, if the action we're seeing in these markets right now, if that doesn't get you excited, we need to check your pulse. Because this is what traders dream about. We're getting some unprecedented moves in these markets because, well, today we'll take a look at what happened today. Okay, we'll take a look at what happened today in the markets, what shook things up, and then we'll be ready for tomorrow. We're going to grab a look at some of these charts here and take a look at some of the clues that we saw from today and see if we can't anticipate what's going to happen tomorrow. First things first here today, taking out my notes here. I encourage all of our students to take notes throughout the day, write a journal, keep a journal. I did the same thing here today. First of all, demand for equities now is tumbling. Now, here's what's happening. We've got the Federal Reserve that last week told us they were going to be continuing with the monthly stimulus of $10 billion less, right? So, of course, they'll be buying less bad debt, basically. So stimulus is going lower now thanks to the Fed. We heard from them last week. Remember, that was a big, important thing we heard about last week. We also are seeing some slowing economic news, right? We've seen very, very poor manufacturing. It all started with China a few weeks ago. If you remember, we heard this very bearish report coming out of China regarding their money markets, and it's slowly trickling into manufacturing, and that's what you're seeing here right now. In my personal opinion, of course, they don't care what I think, but my personal opinion is that at the end of the year, people took profit on equities, right? They've been making some easy money in that bullish market going into the end of 2013, so they take profit on their easy winnings, maybe leave some money in the game, but if you're smart, at the end of the year, you're taking some profit. So that led to some profit taking, led to a pullback in price on equities. Well then, first of the year, what happens? Horrible weather. Right? We saw some horrible weather. We get a transition to the Fed. We get a lot of unprecedented stuff. Record-breaking cold weather impacted a lot of the news reports that we're going to see. Blame it on the rain, blame it on the snow, who knows? But it definitely impacted some of this economic news. So now we're getting all of these different forces of nature coming in. And as you're seeing here now, it's really diminishing the demand for equities. Not to worry, though. Remember we kept talking about, we're due for a pullback here. We went too high too quickly at the end of 2013. We were due for this. Okay, now, this morning, what did we see? We came in this morning. We talked about this in the trade room this morning. Chinese manufacturing last night, the PMI report from China hits a six-month low. All right, so manufacturing, now remember, everything starts in Asia. We go Asia, London, U.S. Now, even though the U.S. is the dog and London and Asia is the tail, right? We don't want to let the tail wag the dog. That might not be the right analogy to use. But bottom line is the day begins in Asia. So this morning, the first thing we saw was what happened overnight while we were all sleeping here in the U.S. And, of course, we learned that manufacturing in China had hit a 6-month low. Well, then we opened up our trade room at 8 o'clock. What was the first thing we talked about this morning as we opened up the trade room? 10 o'clock news. Red Star News. We got some big news today from Red Star News. What was it? ISM Manufacturing. All right. Now, the ISM Manufacturing is one of the most important Red Star News events that we get. But remember, there are only 2 news reports that have long-lasting impacts on the market. What were those 2? Let's see who's been watching. One we saw last week. What was it? FOMC. The second one we're going to see later this week, right? Who the heck could be calling me here in the office? Don't they know I'm trying to do a newsletter? Clearly not. Anyways, back to where we were. ISM Manufacturing. Very important news report. There's only 2, though. They're going to have long-lasting results. One of them is non-farm payrolls, which is this Friday, the first Friday of every month. Write that down. First Friday of every 1 month. I don't care who you talk to. Non-farm payrolls, that's the big boy. Second one, and a close second, FOMC. 8 times a year. We saw one last week. Remember, last one for Bernanke. Well, what's the deal? Well, first of all, Red Star News is important. Why? Because the most amount of eyeballs are going to be focused on those charts. More people, more volume, More personality, more fear, more greed, more volatility, and that usually means, more opportunity for us as traders. So ISM Manufacturing, a Red Star News event. Must have been something big, right? Because gold jumps up. Crude, equities tumble. What did the ISM Manufacturing tell us? Came out a little bit lower than expected, but you really had to dig under the surface for this report to see why things really got shook up. And you know they're going to blame it on the weather, right? It was amazing. ISM came out this morning lower than expected. But we saw the biggest drop in history. That's history. Since they started keeping track of all this stuff, right? Ask your great granddad, he'll tell you. The sharpest drop in history for new orders. Now again, they blamed it on the snow, and they're probably right. I'm sure it was. It was snowing cats and dogs. I know it rains cats and dogs sometimes, but it probably snows cats and dogs too. Snow, ice, cold, record-breaking cold weather, right? You want to see a benefit of that? Check out nat gas futures. Check out the NG is a symbol. You'll see how that cold weather affected that commodity. Well, here we are now. I've got ISM Manufacturing with the sharpest drop ever in new orders. Whether we blame it on the snow or whether it's really what's going on, it smells a lot like, right? We've got that accurate because the Chinese manufacturing came out lower. ISM Manufacturing came out lower. We heard another news report last week. What was it? Durable goods. Remember durable goods? What was it? The biggest drops in 6 months, something like that. So we're seeing a pattern here. Whether or not the snow was resulting in the sharpest drop ever, I don't think the snow is to blame. We're definitely getting a slowdown in economic growth. It's the way it goes sometimes, guys. Market can't keep going up forever. Maybe it can, maybe it can't. Let's talk about what happened in the market now. Crude oil. Now, what happens when manufacturing goes lower? Think about manufacturing. When I think about manufacturing, what do I think of? I think of factories. Those factories need heating and cooling, nat gas, right? Electricity, equities. Manufacturing plants, what do when they build those widgets and those products? They ship them out on automobiles, trains, airplanes. What do all those things do? They consume crude. So naturally, when we see ISM, anything regarding manufacturing, guys, is going to result in a bearish move on crude. Now, we didn't even need the manufacturing report this morning to come out. We were already bearish on crude based on technicals. But it definitely didn't hurt to see some lackluster report at 10 o'clock. Anybody wondering why gold went up almost 1% today? You guessed it. We're getting what they call a flight to safety. What this means is manufacturing in China, manufacturing in the U.S. Again, durable goods last week, ISM this week. We're getting lots of signs that the manufacturing industry is slowing down, which is a big finger on the pulse of our economic growth. When people are worried that the economy is not growing the way that it should, what do? They take their money out of dollars, they take their money out of equities, and they put it in bonds, and they put it in gold. Okay, bond market shot up, gold market shoots higher. But these little moves, these were small compared to what happened in the equities today. Another day of big losses in the equities. Now remember, we had a couple big days at the end of 2013. So again, I don't want to make this sound like it's the end of the world because it's not. What we're seeing right now is that correction they were talking about. Just so happens to be happening at the beginning of the year. Mini Russell drops 3.2%, 320 basis points today. We were selling the Russell all the way down today. And at eventually, about noontime, I said, is it going to keep going? And of course, we're technical traders, so we just keep selling when we get sell signals. It's very simple. I'm seeing this thing right now continuing to move here overnight. So very active. All right. So news came out overnight. News came out today. Impacted our equity markets, our commodity markets. Guys, in all reality, remember, as day traders, we don't predict, we react. So everything that happened overnight, all the news that came out, it's very interesting. I'm always curious to know what caused these things. But in all reality, guys, do I need to understand it all? Absolutely not. Absolutely not. Find the trend on the anchor chart. Find the entry pattern that goes with the trend. Protect your capital at all times and take that money and run. That's what we do in our trade room. Now, is your wallet hurting today? right? You feeling that in your back pocket? Is your wallet hurting? Well, it should, because this day in 1913, that's almost 100 years ago, right? It is 100 years ago. The federal income tax was born. Did you know, right? There was this thing they called the Tea Party. Remember that out in Boston where they tossed all the tea? What was the problem? Taxation without representation. Guys, you should know this, right? Went to school, right? I know. I fell asleep in that too. History wasn't as fun when we were kids. Now history is really cool, right? Amazing how that happens. Funny how that happens. Today is the birthday of the federal income tax. And you remember, the 16th Amendment had forbid a general income tax in the U.S. That didn't last very long. Today, Ben Bernanke hit the road. Sayonara, helicopter Ben. In comes Janet Yellen. Ben Bernanke was a dove. What's a dove? Low interest rates. What's a hawk? High interest rates, right? Hawk high, hawk high. Remember that little trick we use. Janet Yellen's a dove. So we now have a new chairperson, right? Not chairman anymore. And they don't call it chairwoman. It's a chairperson. So Janet Yellen sworn in today. Now, Janet Yellen, just like any other political electee, this is one of the only spots in our government system that's not actually appointed by an open election. Okay, this is appointed by the Federal Reserve Board. She gets 4 years, so she'll be here until 2018. Can't believe we're going to see 2018. Incredible. The Chinese New Year continues this week. I know here in Los Angeles we had it was red and gold and there were firecrackers everywhere. You would have thought it was, well, New Year's Eve. So happy New Year's. Everybody's celebrating the Chinese New Year. And of course, the Solar New Year begins February 1st. Interesting stuff here. Ford earnings came out today, down 7% year over year. They just showed us a month over month big drop as well. And GM reporting a 12% year over year. And again, everybody seems to be jumping on the bandwagon, blame it on the snow, blame it on the snow. I grew up in New England. Snow didn't have that big of an impact, right? I don't think it would slow down the sale of automobiles, but I guess it did. Tomorrow, looking forward tomorrow though, we got factory orders. So December factory orders. Keep an eye out for that tomorrow at 10 o'clock. Not a Red Star news. So what's likely to happen tomorrow, now again, don't predict. What's likely to happen tomorrow though is we're likely to get some range-bound markets because today was such a big range type of day. Remember, wide range today, narrow range tomorrow, vice versa. We're going to jump right into some charts here right now. I'm excited to jump in. If I had sleeves, I'd roll the sleeves up. We'll see you guys on the other side here. Let's rock and roll and get ready for tomorrow. All right, guys and gals, thanks for sticking around here with me. You've taken the first step here towards your trading success. We made it through the introduction. Now comes the real work, right? Fun's over with. Roll those sleeves up. Let's grab some charts. And my goal here this evening, okay, this is how we do this. I'm going to prepare technically so that tomorrow I can't be caught off guard. I'm not going to try to predict. I'm going to react. All right, so we're not trying to make predictions tonight because nobody cares about predictions. All I care about is tomorrow morning at the opening bell, what happens? And based on where the opening bell rings tomorrow morning, that's going to tell me exactly what to be looking for tomorrow's trading session. Don't forget, every morning we do all of this in real time, starting at 8 a.m. Eastern Time in our live trade room. We offer a free trial. And of course, you can always register for our newsletter right on our blog at sidewaysmarkets.com. Let's take a look at what happened today on crude. Now, first of all, crude, one of my favorite markets, definitely being affected right now by this manufacturing slowdown. We saw a 2-day relationship that was bearish. Very wide range, right? This range was wider than normal. Okay, whenever we see a wide range, we typically see the following day to be a more narrow, range-bound type of day. So look for that tomorrow. Again, we don't predict, but it will make sense if that happens tomorrow. Big clue here was we closed at the low. This is a really bearish clue. Now, the closing print's important, but what's most important is the opening print tomorrow. If we open up below 96.26, I'm going to be selling short. Now, remember, oftentimes, even when we open up below, we move inside that range slightly and then go lower. That's what will likely happen. Most of the time, if we open up below today's range, we're not going to go straight line down. We'll usually end up retracing a little bit higher and then moving lower. So if we open up below 96.26, again, if the print is below 96.26 tomorrow at 9 a.m. Eastern time, that's when the opening bell rings on crude. I'm selling short with a target at 95.21. And I've also got one more down here below me at 93.65. So these are my two easy targets. Big target, though, is going to be that prior week low at 95.21. Then you've got 2 weeks ago, you've got 2 weeks low at 93.65. All right, those will be a bunch of important levels to remember about. Looking at this to the upside now, we open up tomorrow morning at 9 a.m. above 97.94. We're going to be bullish. Now to the bullish side, we get a little bit less room. Notice all the space that we have tomorrow to get short below today's lows. Look at the space that we have tomorrow to get long above the highs. Now, it's not a huge difference, but that's quite a bit of a difference because the problem is going to be trying to trade between 97.94, right, and this 98.59. Not a lot of space up there, so it's probably going to be a little bit difficult. Bottom line, though, is an opening print above 97.94, and I am bullish. But I've got to use this 98.59 as resistance first. So what do we always say, right? If we're bullish, we want to buy, but we don't want to buy into resistance. Well, that's resistance right there. So use it as a clue above 97.94. But then the big thing, in my opinion, is going to be getting above that area and then getting into our long trades, right, above it. Now, as we look higher, we haven't been here in quite a while. So if we do make it up top here, we can all of a sudden now, I can see that big round number of 100, just a hop, skip, and a jump away. So that's where we're going if we can get up and stay above that 98.59 tomorrow morning. Again, not going to try to predict, though. I'm going to react. I'm bullish above 94s, bearish below 26s. And again, looking at this from a volume perspective, you can see here that we got most of the volume was traded towards the end of the morning down near those lows. That means clearly now this closing print, that's the first bearish clue. The second bearish clue, though, is all that volume piling up at those lows. So we know that volume is an expression of interest, right? What else could it be? So if there's a lot of volume down there, that's clearly an expression of interest, either buying or selling, but the interest is clearly, right, a little bit lower than it was today. So bearish on the chart here on the VIP chart. But again, this is just used to tell me tomorrow morning, what's my levels? Now let's find some important turning points on our anchor chart. Now on the blog, as part of our newsletter, I went out and I put some snapshots for some of those previous charts. So if you zoom all the way out, right? So if you zoom all the way out on this chart, okay, we get a bunch of support below me and a bunch of resistance above me. Okay, so I'm not going to go over that stuff right now with you, but just check the snapshots that you see below the video tonight. It's right in the text of our newsletter, and you'll see that will give you a better look at the longer term outlook. The short term outlook, though, for all of us day traders, what are we seeing here? Now, again, we're not going to try to predict, but what it's looking like right now is looking pretty bearish. What's the first clue? Long-term trend is down. Short-term trend is down. Now, we didn't get a recent lower low, so that's going to be a big clue right now. No lower low in price, so we would like to get another lower low here and then get up off those lows to get a short. Okay, so the ideal scenario here to get short right now would be to sell this 97.10. 97.10, 97.30, these are the areas now that I'm looking for the best selling opportunities. Now, if we don't get there, that's fine. I want a lower low, and then I'm looking to get short here. Targets now below me, 95.66, 95.20, 94.97. 94.63, and the list continues down. I've got another one down here, 92.90 and 92.18. Again, check out the blog for those snapshots, and you'll see the big picture levels that I posted there. Now remember, the most important thing here is, what's our trend? Bearish. What do we do in a bearish trend? We sell. Where do we sell? Do I sell at a premium or do I sell at a discount? Remember, if I want to sell my house, do I sell it when the prices are high or when I sell it when the prices are low? If I want to sell my home, I want to sell it when prices are high. I want to sell at a premium. What about if I was buying a new car? If I was buying a new car, would I buy when they double the price or would I buy when they discount the price? When they discount, right? I don't want to buy at a premium. I want to buy at a discount. So we're trying to sell, so I want to sell at a premium. There's a premium right there. There's a premium right there. There's a premium right there. Where are we right now? Well, we're a little bit in between. Okay, a premium would be up here around 97.10. A discount would be down at the 96.26. So ideally, yes, I mean, I can sell right now. You can sell whenever you want. We're just trying to increase our odds of success. Ideally here, I would like to see price go up so I could sell it short at a premium. If price makes a new lower low here tonight, be careful selling those lows. Wait for it to reverse off those lows so I can sell it at a premium, and I'm going to use these levels that I've talked about here below as my profit targets. That does it for our black gold, one of my favorite markets to trade. Don't forget, this crude oil rolls over monthly, and we recently, right, rolled over the 314. Okay, so that takes care of the black gold. Now let's go over to the gold. Now gold was incredible this morning, the way that it opened up inside the middle and then immediately took off to the upside. We were buying gold this morning as much as we could possibly get our hands on it. And then sure enough, at 10 a.m., ISM comes out, and that's what resulted in this huge candlestick. Now, once that candle took off, it pretty much ran without us and then went sideways for most of the day. Now, if you look closely, and for all my market profile traders out there, members, I'm looking at you right now. You should know this stuff. This is called a double distribution day. Now, a double distribution day is a very important type of trading personality, right? It's a day type. Now, if you want to learn more about market profile, I would recommend either joining me in my market profile training as a student or read the book by Dalton called Mind Over Markets. This book is very technical, but it is going to be a very thorough and detailed tutorial, or more than tutorial, education on market profile. Now, I don't use market profile per se the way that a lot of people would think you would use it. I use it as a market personality clue, as a supply and demand clue, as a support and resistance theory. Okay, so I use market profile a little bit differently than you would read about it in a book, and I think I use it one of the more effective ways in this type of market environment we're seeing these days in 2014. Come out and see me in the trade room, and I'll just tell you guys all about what I know about market profile. Again, double distribution day tells me that we started off down at the low, and then something else happened and caused it to go higher. That something else was the news at 10 o'clock. Two-day relationship is bullish, the range was typical, and the closing near the middle. So a double distribution day tells me that we now have two high volume areas. And what is likely now to happen is we're likely to go back and forth between these two areas until something else happens to drive that price higher or lower. The closing print off the highs gives me a very big clue. We're not as bullish as it looked like we were. And at the same time, we're very much in balance right now. You can see in the past, we've got a couple other trading days here where we're pretty much right in the middle, right, of this last few weeks of trading. So we're still very much in balance. Remember how I said earlier on in the introduction, there's only two news events that really have long-lasting results or long-lasting impact on price action? We only saw ISM Manufacturing today. So by this time tomorrow, the markets will have forgotten about the ISM Manufacturing, and they'll be working on something else. It's just the non-farm payrolls and the FOMC report. Those are the only ones that I care about. Okay, good example here. Big jump up this morning on gold after that news came out, but in all reality, we know, right, it's probably not going to last very much longer than just one session. So tomorrow, it all revolves around the opening print. Get me above the 1266.1. I got to use this prior week high as resistance at 70.8, very similar to crude oil. Above 66.1, I'm bullish, but I really got to get myself above the 70.8 if I want to be able to get some wide open spaces. And look what happens here. We get above the 70.8, right? The prior week's high. We had the prior week high last week, and then now there's the week high there. So it's pretty much a 2-week high at 70.8. Get me above that. I got 76 even as a target, 96.4, and then look at that, all the way back up to the big round number. Now, this could continue. If we continue to get some lackluster manufacturing reports tomorrow as well from factory orders, get ready for another bullish move here on gold. Opening below 1245.2, get me below 45.2, and now we're selling off here. Now I'm bearish. Again, another very interesting scenario where we have literally 2 weeks ago's low and then last week's low. Look at how it is right here. There's last week's low, 38.5. Then there's the prior week's low, 35.5. So really we have this kind of range just like this, right? So there's our trading range right now. So when open below 45.2, I'm going to be bearish, but I've got to be respectful of that major support area down below. Get me below now the 33.9, and now we have what we need here for the wide open space to get short. I've got 1218.7 down below me, so get me below that 33.9, and we're off to the races selling short down to 1218.7. Everything revolves around the opening print tomorrow. A double distribution day, though, tells me today that anything can happen tomorrow. We'll be ready for it. Make sure you are too. Now, move from the commodity markets over here to the equity markets. We've been talking about the E-minis. The demand of all the equities has really been diminished. We've got less Fed stimulus, and we get a little bit of a slowdown in the overall economy here in this planet of ours, and that's causing some profit taking and some concerns over equities moving higher. And you're seeing a very big drop here today. The Russell moved today over 3% down today on the day, and you can see it just literally straight down. Now, this made for a very easy opening bell analysis, even though it gave us a little bit of a head fake. Now, we always talk about the opening print. Well, there's last Friday. So where did we open up this morning? We opened up inside the range today. So what did that have me saying? This morning in the trade room, my exact words were, with the opening print inside Friday's range, we were expecting there to be a bounce at this low. Remember that this morning, guys? Remember if you're in the room this morning? So we said, all right, so there's the low from last week. Right there, right? 17.3. So that was the low from last week. So we were prepared because it opened inside the range. Remember, inside means two-sided trading. If it opened up below, we're bearish. Opened up above, we're bullish. What do we see? Opened up inside. So what does that tell us? We want to wait. Okay, we need to wait for the first 15 minutes to see what's going to happen. And sure enough, the first attempt bounced. But the second attempt went right on through. And this was a very important example this morning for everybody in our trade room to see that although we are expecting it to bounce off that low because, again, it opened inside yesterday's range or Friday's range, big difference there. If it opens up below, I'm bearish, and I'm all bearish. If it opens up inside, though, then I'm two-sided. I can go either way. And right when we thought we had those sellers beat, that 10 o'clock news came out, and this big red candle is that 10 o'clock candle. This is a 30-minute chart, and it opens up at 9:30. So the first 30-minute candle is the 9:30, then, of course, the 10 o'clock. So here we are now. Bam. Once we get the close of that candlestick below the low, then everything changes. So I'm going to repeat again. We open up inside the range. We're two-sided. I'm going to buy the lows, and I'm going to sell the highs. So I wanted to buy those lows, and I wanted to sell the highs. So we initially thought we're going to go down, buy those lows. It happened once, but it didn't happen a second time. Second time, look out below. Watch yourself because this thing went quick. It went fast. And again, what I'm going to use is I'm going to use at the very least, a 5-minute chart closing below that prior day low. This is really important. The reason why we use time-based charts on this is because I need it to close below. Okay, time-based charts are important in certain situations. This is the only time-based chart you'll see me use, and I do that for a reason. Then once we saw ourselves close below Friday's low, we had already seen everything else dropping, gold jumping higher. At this point, it was very easy for us now to go hunting for shorts, and it was relatively simple. I botched one of the shorts. I really missed my biggest trade of the morning this morning. Just literally took it 2 seconds too late. But other than that, though, made some pretty good money following our plan below Friday's range. So now what do? Now here we are. 2-day relationship is just a little bit bearish, just a little, right? So I'm kidding with you, very bearish. The range was very wide, and we closed near the lows. Now, what is that telling me? Well, first of all, the bearish 2-day normally means a lot to us, but over the past 3 or 4 weeks, we've seen so many times where it's been bullish one day, bearish the next, bullish the next day, bullish, right? It just doesn't matter anymore, right? These markets are so volatile, which is great for people who don't want to predict, right? You're wasting your time trying to predict this stuff. Okay, the range, very wide. A very wide range tells me to expect what? To expect a narrow day tomorrow. So expect a little bit narrower movement tomorrow morning. Again, nothing guaranteed, but that's what usually happens. I think the big thing, though, today was the closing print at the lows. The closing print, you can see, there was no short covering rally here, my friends. Okay, if you look at gold right now, look what happened on gold. Okay, so gold jumped up, but then look what happened towards the end of the day. Right, so gold jumps up, but look what happens. It pulls off that high, right? So gold has a profit taking at the high. That tells me that the traders on gold were just in it for a good time, right? They weren't in it for a long-term relationship. I'm kidding with you. What kind of party is this? But gold, right, a little one morning stand, if you will, right? Get in, get out, make your money and run. But I don't know, though. On these equities, look what we're seeing here. There's no short covering rally there, guys. That means traders who got short early in the morning, they didn't get out late in the day. They didn't take their profit. They're still in this trade short. Now that may result tomorrow in a fluttering higher, but I look at the volume analysis here and I can see, look, very little volume was traded here. A lot more volume traded at those lows. All right, very, very important clue. In fact, you can see here the point of control where the highest amount of volume right near those lows. Okay, very, very bearish clue. Now remember, who knows what's happening tomorrow though, right? All we know is we're only as good as our ability to be ready to react. So open up above 27.9. I can't imagine we will, but if we open above 27.9, you guessed it, I'm buying here again. Who knows, right? Doesn't matter to me. I'll take it whatever direction it wants to go. If I get above 7.9, though, just remember to use these levels overhead as targets. 35.6, 42.7. As we go a little bit higher here, I've got 72.5. And then last week's high, 2 weeks ago's high, 80.1. So above, we got targets here that have been listed on your chart. I would assume, though, tomorrow morning, and you know what we talk about, don't assume, make sure you react. But I would assume, though, with this wide range today, we're probably going to see an opening print somewhere between the high and the low, and we'll be buying lows, and we'll be selling highs, avoiding the middle of this range tomorrow, right? Avoid the middle. If we open up below 86.6, we're going lower. 74, 71.3, those are easy profit targets as we go lower. And then look at this big wide open space. A little bit of support here, and then whoops-a-daisy, there she goes, down to 1031.9. All right, now, couple key things here before we wrap up on the Russell. Big round number. Big round number. These big round numbers, these are the kids your mom warned you about when you were a kid, right? Watch out for those big round numbers. We're below 1100. If we open up inside the range tomorrow morning, do not be surprised if we just get stuck around that big round number of 1100. Again, wide range. Is it going to be a narrow range tomorrow, inside today's range tomorrow? I think it will be, but we'll see what happens. They don't call me very often. Actually, maybe that's who was calling my office earlier. Russell, was that you? Nope, I'm kidding with you. Probably not. Let's keep going. Last but not least here, on the Russell, we have our anchor chart. Now, once again here, if you zoom all the way out, I did find some more significant levels. We got a lot of support levels down bottom here. I put all of these levels for you conveniently on the blog on the newsletter here tonight, so check those snapshots. Now, let's see who was paying attention earlier on. What's my trend? I'm bearish, right? Yeah, pretty easy to see that. Trend is bearish. Now that we know our trend is bearish, what am I supposed to do in a bear trend? Sell. But where do I want to sell at? Who is paying attention? Who knows the answer to this one? I sell at a premium, right? Repeat after me. Buy at a discount. Sell at a premium. It ain't rocket science, right? It's day trading. Not difficult. Don't make it too difficult. So if I'm going to sell at a premium, where am I right now, Mr. Russell? Would I call this a premium or would I call it a discount? Where would a premium be? There's a premium. There's a premium. There's a premium. Where would a discount be? There's a discount, 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 and you got it, at a discount. So I want to sell this Russell. Where would I need to get it to go to be confident that I'm selling at a premium? Well, definitely not right here. So I zoom in a little bit closer here now, and just like we said on the crude oil. Luckily, I'm not an English teacher for you guys. I want to sell at resistance. So now I'm looking at 1116, 32.9, 61. That's going to be a real big move higher. We'll have to look at something else. We'll probably get a buying opportunity before we get to that selling opportunity there. But the reality is, though, is that right now we're at a discount. So at the very least here, guys, I want this Russell take some profit on that shorts, and then we're looking to get short here again. So I want to see this price come up off this support zone here, 1095 to 1084. And again, check out the blog because I put up all these levels for you guys on the blog. A little bit easier to see than on this zoomed in version of this chart. So the ideal scenario is on the Russell, I want to see it go higher so I can then see it reverse and I can get back to selling at a premium. If I sell right now, I'm selling at a discount. I don't want to sell at a discount. I want to buy at a discount. This is where you can be pretty aggressive buying now. But again, you're playing with fire because you're going against the long-term trend, right? It's like being a fish swimming against the stream. It's going to be exhausting. So keep it simple. Follow the trend. Don't predict. Buy at a discount. Sell at a premium. And I think that does it here for today. Thank you so much for being a part of the newsletter here tonight, guys. Don't forget, share this with a friend. Okay, send this newsletter to a friend. You'll be happy you did. They'll thank you for doing it. And don't forget to join our free trial. I've got a special invitation, a free pass to come attend our live trade room tomorrow afternoon at 2 p.m. Signing off for now, the corporate office here in Los Angeles. We'll see you tomorrow. Adios, amigos. Bye-bye for now.